Thank you for joining me. I'm Alexandra, and I want to talk about People's United Financial, or their ticker symbol, which is PBCT. And I never figured out what the C stands for, or the T really, but I'm guessing it's People's Bank of Connecticut? I don't know. Who knows? I don't think it matters either. So, they're a bank, obviously. Current stock price $14.83, which gives them a market cap of $6.3 billion. So obviously not a big bank. Revenue $2 billion, up like 10%. Earnings $573 million, up like 10%. And current PE is 11 with a forward PE of 12, or slightly over 11.5. Obviously not a problem, and obviously in line with the big banks like Goldman Sachs and whatnot. So currently banks tend to hover around the 12 PE, which is obviously not terrible. Dividend yield just under 5% with a payout ratio of 54%, which is pretty nice. And also they're dividend aristocrat, so they have increased their dividend every year in the past 25 years. And yet the payout ratio is still pretty decent. So I actually used to own the stock, and I used to own it because they're a dividend aristocrat, and I was going to own it for a very long time, and I'll probably buy some more shares at some point. Total assets $63.4 billion, total liabilities $55.5 billion, which gives them a total stockholders' equity of just under $8 billion, which is up from over $7.9 billion. So there's a very minor difference there in current year versus last year. Also, stockholders' equity higher than the market cap, which is obviously a good thing. And assets liabilities being fairly balanced, obviously also a bank thing. Can't really ask for that much more. And, like Goldman Sachs, assets and liabilities are outrageous. So not a terrible thing, pretty much in line with banks. Risk factors, I'm guessing a global financial crisis where they have to write off a lot of their loans. I can't really think of too many other risk factors there. Obviously they're fairly small, so they guess they could be disrupted, kind of, sort of, a little. That doesn't really happen to banks, though. So I don't see any risk factors here. Overall, I don't think there's enough growth for a growth investor. For a dividend investor, I think this is a very interesting stock, and I definitely think you should look into it. Payout ratio is fairly low with a 5% dividend yield, which is pretty nice. Balance sheet is it's a bank, Revenue growth is pretty nice, and so I think it has pretty much everything for a dividend investor. For a value investor, the balance sheet is revenue growth is nice, price to earnings is nice, dividend is nice, bonus on top of that. Again, very interesting stock. Wouldn't blame anyone from looking into that and getting that 5% dividend, I guess. So, as I said, very interesting stock for pretty much anyone. That's it for me for today. If you like this video, make sure to subscribe and find out more videos every day before market open. I hope you have a successful day.